Hi, you are watching Charter Times and I'm your friend Shammi Prabhakar. In last 20 days, I have analyzed more than 200 stocks to find out the best suitable ones in current market scenario in which I can invest myself and definitely I can recommend it to all of you as my friend. So I'll just discuss about some of the most lucrative stocks as of now who are either trading on the 52 weeks lowest. Some of them are trading on 10 years lowest as of now. And definitely it's just because of the external factors, just because of the COVID situation, just because of the oil price or something else, which is going to get corrected, of course, in near future. So this is the best time to bet on these stocks. Well, so before we begin with the stocks here, I would like to remind you, if you have not subscribed to our channel, please do so. Please go ahead and subscribe the channel so that you can always get the videos which are valuable for you in your YouTube feeds. Apart from that, you should always exercise due care. You should always do your due diligence before investing in any shares. Don't go with the tips alone. I can provide you the fundamentals here. I can provide you my recommendations here. But again, it's your choice which stock you want to invest in. So we'll start with the first share in this list, and that comes from the banking sector. I'm not talking about HDFC Bank here. I'm not talking about State Bank of India here. But this is something equally big. So my recommendation for banking sector as of now, you can bet on Bank of Baroda shares. The reasons are very clear. In last 10 years, it has never seen this price on what it's trading now. I'm not saying it will not go below this. It can go below as well, but definitely it will come out and it will recover very soon. So the current market price for this share is 46 as of now. It is already trading at the lowest of this year as well as last 10 years, as I said. Then if you look at the higher side of the shares, last 10 years, if you look at it, the highest point it has touched is 223. Okay, even last 52 weeks, this share was trading on 146 rupees. Think of it, it's trading on one third price as of now. Definitely, there are some reasons behind it. The entire banking sector is suffering, and it is going to suffer even further in next few weeks because a lot of NPAs will happen, a lot of other factors will kick in due to the COVID situation. But definitely, this is not something permanent. It is going to get corrected very soon, and government cannot afford to let it be like this. So all the incentives, all the benefits our banking sectors are going to get the way it is getting now. Bank of Baroda, after the recent merger, is third largest public sector bank of India. So definitely there is no doubt on the stability of the bank. There is no doubt on the asset size. The best part here is the book value of these shares as of now is 190 rupees. So what you're going to pay for buying a share is not even one third of the amount of the book value, which is a great factor to consider. Similarly, the next thing we look at is PE ratio. PE ratio, price earning ratio. So what you pay as a price versus what the company is earning for you is less than 10, and that is the most ideal situation to invest in any of the companies. Promoter shares 69%, very good. Another USP for this particular share I would suggest is the net NPA. The net non-performing asset of this particular bank in the last reporting financial is 3.33% only, which is one of the lowest in the banking industry of India. So this is definitely a very big edge for this share, and you can trust the asset size, you can trust the balance sheet of this company. Looking at these all factors, what I would suggest, you can buy it in two parts. You can invest half of your amount allocated for this share as of now, keep half of that in reserve. You just have a look for next 2 weeks and then you can invest the remaining one. So my next recommendation comes from retail sector. It's one of the leading company in retail sector, in retail chain, the Big Bazaar owner, the Future Retail Limited. We all know about Future Groups. The company looks very well. It's doing continuously very good for last couple of years. Current market price of this particular share is 100 as of now. It has touched lifetime low of 60 just a few weeks back. The highest price of this particular share in the lifetime is 656 rupees. Even last 1 year, the highest price has touched 489 rupees. It's just trading at less than 25% of the 52 weeks high as of now. What's the reason? That will come in my fundamentals ahead. So the book value of the shares are 73. In this particular sector, in the retail sector, you won't find any of the good companies with a good reputation, with good market value below the book value as of now. So any of the peers you'll not find with a better book value here, because it's just close to the current market price as of now. So if you see, the book value is 73 and current market price is still 100. So again, the biggest factor is price earning ratio. It has maintained on 8 as of now with the current price. Promoter shares 47%. Till here everything looks very well, but here comes the catch. On the promoter shares, which is 47% of the company shares, outstanding shares, the pledge is there for 51%. That means 51% shares of promoters are pledged. So they are not the direct owners as of now. They cannot control these shares as of now. So that's where it comes with the negativity. That's where it comes with the risk now. So, however, there is a positive development in this particular case. High Court had just pronounced recently, last week, in a judgment that promoters cannot put the shares which are placed for sale as of now. So that's a relief, and that is the reason you can see the graph is going little higher now. It's rallying already. Every day it's increasing by 4 to 5 rupees, and very soon it might catch up the pace again. Another negative factor for this particular share, another risk factor for this particular share is the debt equity ratio. So the company has 66% debt of the equity value, which is considerably higher. So this is something we can see as a risk. Company has to pay considerable amount of interest, and of course the debt holders are one of the significant owners of the company here. So these are two risks: the pledge percentage, which is above 50, of course a dangerous sign, and the debt equity ratio. So if you can ignore these 2 points as of now, considering the potential benefits from this share, because of course you have to take some risk to get some benefits, you can definitely consider investing. Let's have a look at oil and gas industry now. So this industry is going through very bad time as of now. Globally, oil prices have crashed. COVID situation have significantly reduced the demand, and a lot of other factors. So this is one of the sector without which you cannot survive. So definitely the oil demand cannot be reduced for a longer period. It cannot be permanent. Oil demands will definitely get its place back in near future, in 6 to 8 months, maximum a year. Definitely, COVID is not a permanent, it will go away. And so all these factors are temporary. Once it goes away, the situations, all the worries of this particular sector will also go away along with it. So as of now, one of the best pick I can tell you is ONGC from this sector. The current market price of this particular share is 67. The 10 years low of this particular share is 51. 51 only, and 10 years high, if you see, 314. 52 weeks high is 178. So again, this share as well is trading almost at 1/3 of the last 1 year high. If you look at overall picture, it's almost trading at 20% of 10 years high. So definitely there is a lot of potential. If you talk about the company, the book value of the company is 161, which is almost more than 2.5 times of current market price. So definitely the balance sheet is strong here. Price earning ratio is 4. It's one of the rare cases. If you get anything below 10, you don't have to think again. But definitely this is one of the biggest factor. So price earning ratio is 4, book value is 161, 2.5 times of the current market price. Promoter shares 63%, very well. Debt equity, of course, under control is only 11%. So debt in the companies are only 11% of the equity. And so as of now, this is the best time to invest in this particular company. So I'll go with the approach of investing half of your bucket in this particular share as of now, whatever you allocate to this particular share. Remaining half, you just keep in wait. You just have a watch. You just keep monitoring the performance of the share. Give it another 3 to 4 weeks time, and then you invest rest of the money. Now I'm going to talk about one of the best share from auto industry as of now. So company name is already well known. You don't need any introduction for this particular share. I'm talking about Tata Motors here. So current market price of Tata Motors is 74 rupees only. 10 years low, if you look at it, it's only 63. So it's very close to the 10 years low as of now. 10 years high, if you look at it, 587. Well, too much potential to do. 52 weeks high, last 1 year, it has already touched 233 rupees, the highest point. Book value as of now is 71, so it's almost trading at the book value as of now. That's another positive sign for this particular share. P ratio less than 10, very good in terms of other companies in the group, other peer companies. Promoter shares for this particular company is 47%, not bad. Pledge only 4%, you can just ignore it. Debt equity ratio, this is something, a bit of risk you can smell here. 79% debt of the total equity. That means company has interest liability, which is significant. And so as of now, if you look at it, the good news which is coming, which can boost up the share prices for this particular segment as of now, is as soon as the COVID situation goes down, the prices of these shares will automatically shoot up because the demand will again get restored. Now no one is buying cars. There's no turnover in the stocks as of now for last 2 months. No one can think about buying a car in this particular situation. So definitely demand will get restored. Second good news coming for this particular share is it has already planned to restart the Jaguar Land Rover factory across UK, Austria and other countries, which was already shut for a couple of weeks due to COVID situation. Now it has already announced that 18th of May it's going to restore the operations partially in all these regions. So again, the production for these luxury brand cars will resume. So, and definitely in India as well, it is going to resume very soon. So this particular share has a lot of potential to go up. Once again, I would request you to subscribe to our channel and share this video with your friends if you find it valuable. Thank you so much for your time.